Hello beautiful people, welcome back to my channel where we talk about personal finance, investing and building wealth. In today's video, I really wanted to give you guys a comparison between all my investments on TRADING212 and Vanguard and see which one is beating the market or which one is more likely to beat the market in a crash. I'm really not sure if this is going to work out, as up until now there was a huge difference between TRADING212 and Vanguard and the return I was getting. However, last time I checked into my Vanguard account, everything was in the green, so it may defeat the purpose of this video, but let's see. Some of you may already know that I do have a separate stock investment portfolio on TRADING212, but because I like to be diversified and I like to tap into different markets, I did also invest in Vanguard and I invested in some ETFs. If you want to have a look at my stock portfolio, I will link it somewhere here or I will leave a link down below in the description box. Go give that a watch. I go through every single stock that I own, why do I own it, and why do I believe that it will get me good returns or dividend yields. But for now, I'm going to jump straight into my Vanguard portfolio, which I haven't shown you guys yet, where I have invested in some ETFs. Now, if you're not sure what ETF is or if you're not sure how does it exactly work, I will leave a link down below to my previous video where I go really into detail explaining and comparing index funds and ETFs and all their advantages and disadvantages. But here we go, guys. Let's see what ETFs I have invested in. Vanguard. I have my laptop here with me. I am going to log in live and I'm going to record this for you as well. I just want to be very transparent and show you guys what do I have, what do I invest in, what returns do I get, and hopefully help you guys make a decision for yourself as well. So let's log into my Vanguard account right now. But first of all, did I just hear something? Did you just subscribe? Oh my god, thank you so much. If you haven't though, just make sure you click that button, okay? And hit the like button, smash the like button. Destroy the like button. So here it is, guys. This is my Vanguard account. Probably you can see it somewhere here on the screen. This video is literally not scripted. I am literally recording my screen and myself in the moment, and I'm showing you everything as it is, organic. So let's see. Once you log into your Vanguard account, you can see the type of account that you have, and I do have an ISA, and I have 18,000 remaining, so that means that I have invested about 2,000 pounds already. My largest holding is the S&P 500 ETF. And something very important here is that I already have 7.5% return. And the time I invested was, I think, 30th of April, so that's just a little bit over a month. And in a month of coronavirus, to get 7.5% return, I am pretty happy with that. I mean, I'm not saying no to that, you know? So let's see what ETFs I have invested in. Now, if we go over here and click on investments, it should load up, and here it goes. We can see that I do have Footsie 250 and I have about 500 pounds in that. I do have Footsie All World High Dividend Yield, around 500 pounds in that as well. And my largest holding, as we saw previously, was S&P 500, which it still is. And we can see here the current value of the investment and the change. So you can see that all in total I put 2,000 pounds. Now it's worth 2,150.09, and in total I have made 150 pounds on top, which is 7.5%. And I am pretty happy with that. Now, what I'm going to do is I'm going to go into each ETF and I'm going to show you guys how does it perform, what is it all about, and what does it do. And after that, I'm going to log into TRADING212 and see what's happening on there and compare the two platforms and which one is performing better. Now here, I've just gone to the ETF page on Vanguard to find all my ETFs and show you guys what it is all about. So let's see which one we are going to start with. So the first ETF that we are going to be looking into, it's the Footsie All World High Dividend Yield. As you guys probably know, I do like dividend investing. I think that it's a pretty, I wouldn't say safe move, but it is safe in a situation where growth might be jeopardized, like the next couple of or few or 10 years, where we don't know whether the economy really is going to be sideways or upwards or downwards. We really don't know. So dividend investing can be quite good in that situation. You probably already saw that I do have quite a bit of stocks, quite a bit of dividend paying stocks in my TRADING212 portfolio, and I also invested in a dividend paying ETF. So let's see, as you can see, the price is quite affordable. The number of stocks that this ETF consists of, it's almost 1,700. So you can imagine the diversification here, it's pretty good. The ongoing charge on this one is 0.29. You do have lower charges, but I'm happy with that because I know they have to work out all the dividends and when are they going to be paid and how and to who. So it's still a small charge in comparison to like 0.6 or something like that. So I am willing to pay for that. There is here, it's a 5 out of 7. If you don't know, Vanguard has its own risk scale from 1 to 7. 7 being obviously the riskiest and 1 being the lowest risk. I am pretty young, I am in this for the long run, so I don't mind investing a little bit risky, but I don't want to be stupid risky, if that makes sense, you know. But as you can see, if you move a little bit downwards, you can see the objective of the fund. The fund employs a passive management or indexing investment approach through physical acquisition of securities and seeks to track the performance of the Footsie All World High Dividend Yield Index. The index is comprised of large and mid-sized company stocks, excluding real estate trusts in developed and emerging markets, to pay dividends that are generally higher than average. The fund attempts to 1. Track the performance of the index by investing in a representative sample of index constituent securities, and 2. Remain fully invested except extraordinary market, political, or similar conditions. Now here below you can see a past performance graph, but I'm gonna skip that and I'm gonna just jump straight into the whole price and performance page. We can see here the previous prices, 52-week low and 52-week high. Currently we are in the green, which is good. We can see some historical prices over here as well, and we can see that this has been growing, which we are very happy about. And then we can see the price analysis. If we pop to 18 months, we can see that it has been gradually growing until, of course, obviously coronavirus happened. I did buy it somewhere around here. Let's see. I did buy it for $45.99. But yeah, so since then it has grown to 48 and 26, which again results in probably the higher return that we are seeing in this portfolio right now. Move a little bit lower, we can look at the past performance. And this is selected as rolling year, so let's have a look. NAV is our native fund that we own, I own, and benchmark is the benchmark that they're trying to track or index. So let's see how it's performed. 2015 to 2016, pretty close. I mean, it's negative, so it's not good, but yeah. Here we have outperformed the benchmark, which is quite good. Outperformed as well. Here they're pretty similar. And here, doesn't look very good, but we're still good. We're still recovering. Let's see the past performance based on a lump sum investment. So if you choose 5 years, and this will tell us, if I had invested $10,000 in this case in May 2015, up until now, we can see that the highest I would have gotten is 12,845 in December 19, and after the coronavirus, I would have only gotten $10,450. Now, we know that the markets will have ups and downs, and you are in this for the long run, so I'm pretty sure that we will recover from this sometime, whenever, and I think that this will grow even above this all-time high that we see here. But this is why I hold it. And also remember that you have dividend yield paying stocks in here, so you're not only getting growth, but you're getting paid dividend as well. So you're basically killing two birds with one stone. Next page is the portfolio data, and here you can see all the fundamentals, which I'm not going to go into, guys, but if you want me to do a video reviewing Vanguard and how to read and choose ETFs and index funds, please comment down below. I'll be so happy to do that for you. But now we're going to have a look at the market allocation of this ETF. We can see that the majority, of course, it's the United States. I think this one is pretty diversified with Europe and emerging markets and etc. As we can probably see here, starting with United States, Japan, United Kingdom, Australia, Germany, France, Canada, Korea, Hong Kong, Netherlands, Qatar, Indonesia, Colombia, Denmark, and everything. Weighted exposure, we can have a look here and see which industries we have invested in most, or the ETF is comprised most of. And of course, the leading sector here is financials with 25.7%, followed by consumer goods and then healthcare, the top three, which I'm not very surprised, to be honest. I'm not surprised at all. But pretty good industries. We have some technology, utilities, telecommunications, basic materials, consumer services. Pretty diversified, I would say. I mean, you would expect that from an ETF. And here at the bottom, you can see the holdings of the companies. Of course, at the top is going to be Johnson & Johnson. If you have watched my stock portfolio video, you will know that I have it in my stock portfolio as well. I do own shares of that. I mean, safety stock, that's all I'm going to say. If you even have a look at other investors and other YouTubers, I don't think that no one goes without buying few shares of Johnson & Johnson. Growth, dividend yield, I think they've been paying dividend yield for the last 60 years, 58, 60 years, and they have been increasing that every year, so I don't think you can go wrong with that. Just quickly going to mention on the distributions tab, guys, is that the yield that closed at 30th April 2020 was 4.9%. I think that's a pretty good yield. If you are looking to build a dividend investing strategy type of portfolio, you're probably well off starting with 3-4%, and obviously you will hold these stocks for quite some time, so that will give them time to grow and to increase the dividend yield as well. So that's a pretty good strategy, and I think that this ETF is basically doing that. The last page is the cost and minimums tab, where it will show you how much money you are saving with investing passively in ETF rather than investing in a similar active fund. And here they say that you're probably saving about £200. I think Vanguard has a pretty good service to cost ratio. I think their costs are pretty low to they offer such a good index funds in ETFs that I think it's just worth it. So if you haven't yet, you might want to check it out. But let's have a look at the next one. The next one we have here, guys, that I had invested in is the Footsie 250. And again, we just go through the overview, and again, market price, it's about £30, which is pretty affordable. As I mentioned in my previous video, I think that nowadays we have a lot more platforms which offer fractional shares or ETFs and index funds which are with a lot more affordable share price and are made a lot more accessible to a lot of people to start investing in. Obviously, Footsie 250, the number of stocks that the ETF comprises of, it's 251. The ongoing charge is 0.10. It's 0.10. 0.10. That is all I'm going to say. Again, the risk is 5 out of 7. As I said, I'm pretty young. I don't mind taking a little bit of risk, but not stupid risk. So, I mean, I mentioned in my previous video as well that ETFs and index funds are pretty safe anyway and pretty diversified, so should be fine. I'm not going to read the objective of the fund because it's basically the same description but just a changed name. And here past performance we can see, but I will directly move to this tab here so we can have a good look. Again, we can see the 52-week high and 52-week low and the market value at the moment. Of course, we are in the green. And here we can see some historic prices, and that again has been growing, except we have a little dip here in May, but that is obviously expected with all the whole situation going on. So let's have a price analysis. Let's choose 18 months. And again, we can see that the price has been really steadily and slowly growing a little bit, of course, until the coronavirus hit or the illness hit. So we can see here that the share price has been slowly and steadily growing with a little bit of ups and downs, of course, until the illness hit and we fell down. So I bought somewhere around here at 25.73, and currently we are at 27.30. So here we go, we have a little bit in the green. So price performance, let's see if we have outperformed. Okay, we lost a little bit more here. Here, okay, we're pretty close. We lost a little bit more here and pretty close. So with this one, with Footsie 250, basically what we can observe here is that when we are in the green, we're pretty positive with growth and pretty close. But when we are negative, we're losing a little bit more than the benchmark. But to be honest, the difference is so small that on the basis of an investment of like 20 years, you probably wouldn't see the difference as much. So just bear that in mind. Price analysis, past performance based on a lump sum. Again, they give you that feature, which is pretty cool. So again, if I had invested £10,000 at 2015, the all-time high I would have gotten is 13,548, and that's about 5 years now, of course, until the illness hit again and we dropped pretty low here. Oh my god, we even dropped at negative, and then we recovered a little bit again. But again, guys, there are going to be ups and downs, so it's not for the weak-hearted. Or moving on to the portfolio data, again, fundamentals I'm just going to skip for now, but if you want me to comment on it, please leave a comment down in the comment section below. And here again we can see Footsie 100. Obviously this is all based on the UK, there's nothing interesting there. And again, financials are leading sector. As you probably know, London is one of the biggest financial hubs here in Europe. Well, not after Brexit probably, but for now still is. And then we have industrial and consumer services, the top three industries here in this ETF. Then followed by healthcare, technology, basic materials, oil and gas, telecommunications, utilities, and etc. So nothing new there. I mean, for the UK it's pretty diversified. So cost and minimums, as we already mentioned, the cost is pretty cheap. It's only 0.10% to hold. I mean, happy with that. It's pretty cheap once again, but you do need to keep in mind that once this investment starts growing, and hopefully it will grow for you and for me and for everyone that is trying to invest out there, the charges can add up. So just do your research. I know that Vanguard is a pretty good and safe place, so I'm okay with that, but for future reference, and if you want to invest, do your research. And here it just shows that you can basically save about £200 by investing in this fund rather than a similar active fund. Moving on, the best and biggest for last. My biggest holding in this stock portfolio, S&P 500 ETF. Oh my god, the charge is about £50, which is pretty decent. We are in the green a little bit, which is what we like to see. Of course, the number of stocks that this ETF consists of are 507, S&P 500. The ongoing charge is the lowest, 0.07. So see how interesting is that, right? We have all world high dividend yield, which is 0.29. We have Footsie 250, which is 0.10, and then we have S&P 500, which is super, yeah, and this is the lowest charge. That's very interesting. Anyway, the risk is again 5 out of 7, as I already mentioned. I don't mind a bit of risk, but not a stupid risk. So please, when you're trying to invest, or when you are starting to invest, or if you are already investing, assess your risk. Do not make or take stupid emotional decisions which will cause you to lose all your money. We do not want that anymore in 2020. Okay, enough is enough. Enough went wrong. We are here to gain. Again, the objective is the same. I'm not going to read it, guys. It's basically the same description but with a different name. Past performance, I will just quickly move on this tab here and see the all-time low and all-time high. We are in the green, of course, and some historical prices. We have a little bit of a dip here, but generally, oh, here as well. Generally, it should be positive, Let's have a look. Price analysis over the 18 months, of course, it has been growing slowly and steadily, and all-time high here, we can see that it's about $64, and then it crashed to 43, and then I bought somewhere around here, let's see, at 55, and now we are at 58. So so past performance, we can see rolling year. NAV is our native, and benchmark is the benchmark that we track, and you can actually see that this ETF has been outperforming its benchmark. Do we not like to see that? But this is actually expected, because if you guys watched my previous video, you will know that I was mentioning that passively managed index funds and ETFs usually tend to outperform their benchmarks. So go and watch that. It has been outperforming it, even if it's only by a little bit, which still makes a difference, you know, and I'm pretty happy with that. With an ongoing charge of 0.07, I mean, I don't think that you can go wrong. Past performance on a lump sum investment, they give you that, and obviously, oh my days. So if you started at £10,000 at 2015, the all-time high here is 16,537. Can you imagine? Oh my god, that's amazing. And then of course the illness hit, so we dropped a little bit, and we were still in the green out of, you know, our initial investment for 10,000, and then we already recovered almost back to normal. I mean, what more do you want? Let's jump into the portfolio data. Number of stocks and fundamentals, again, I'm going to skip, but if you want me to comment on that, please comment down below. A region, North America and United States, of course, S&P 500, and sectors. Oh, let's see what we have here. So you can see how the sectors change, and we start with technology, healthcare, and communication services. I mean, wow, okay. So this is very different to Footsie 250 and to all world high dividend yield. So you can see how things change around here. Top 3, information and tech, healthcare, communication services, and financial is actually on the 4th place here. So you can imagine. Then we have consumer discretionary, industrials, consumer staples, utilities, energy, real estate, and materials. Now, I don't know if you noticed, but in the previous two, we didn't have real estate. I personally am a big fan of real estate investing, but buying rental properties or commercial properties for rent. And I am going to be looking into that in the future. So maybe stay tuned. Maybe I will be doing videos on how I'm buying my first rental property. I don't know. Who knows? But you can see that this changes here a little bit. And here we can see the holding names, and the biggest one is actually Microsoft, and second one Apple. I know that a lot of people hate Apple and the products that they make. I'm an Apple user. I love Apple. It's a great stock. It has grown a lot. the dividend yield is not as good, but that yield will be growing. So just saying out there, you know, just saying. And then we have Facebook, Alphabet, and Class A and C. I think that's Google. And of course, no one can go away by Johnson and Johnson. Berkshire Hathaway, it's a very interesting. So his strategy is being very interesting. Then he stopped investing and he's literally saving his cash. So everyone in the financial community is quite interesting what his move is going to be. There are rumors that he's basically hoarding cash because obviously Berkshire Hathaway is an insurance company and they're probably you know, preparing for insurance claims that they need to be paying out and etc. But I am pretty interested what he's going to say on the next quarterly meeting, so keep an eye out for that. And then as cost at minimums, you can see that 0.07 charge is pretty low, and they show you that you can probably save £289 by investing in this fund, in a difference to a similar active or average fund. But I mean 0.07, it's just beautiful. It's just beautiful. So now that we had a look at what I have invested in Vanguard, what are all the ETFs about and what type of ETFs there are, and we've established that I have a very good return over the past month or so with a 7.5%. Let's see what's going on into TRADING212, and I really hope that it defeats the purpose of this video, because the purpose of this video was to basically kind of boast about beating the market with Vanguard and with ETFs and index funds. But let's have a look. So let's see what is happening in Vanguard. I'm going to be just looking down here, guys, just so you know, and we can basically see that okay, the purpose of this video is not as defeated, but it is a little bit, because when I looked into it yesterday, it was all red and the return was like 3-4%, and all of a sudden today everything is at like 5.7, which is almost 6%, which is almost 1% and something lower than what was on Vanguard. But again, Vanguard is still performing a lot better than TRADING212, and to be honest, during this whole time Vanguard has always been positive. Not once Vanguard was negative. I don't know if I will include here somewhere, if I can find a chart that shows the whole investment, you know, life of Vanguard, to show you guys that it has never been negative. With TRADING212 though, there were moments where everything was red, where everything was low. I mean, I wasn't losing a lot of money, but for someone, for example, I've watched like some big YouTubers that had portfolios of about $250,000 and portfolio dropped to like 150,000, and it's probably like heartbreaking, you know. But definitely Vanguard has been performing a lot better than TRADING212. I think with TRADING212, what my aim is going to be, what I was thinking about, is creating like my own fund. For example, following something similar to S&P 500 or Footsie All World High Dividend Yield. I think that I'm going to probably take an example from all those funds and kind of try to create my own fund in a way, but with a lot more dividend stocks, and I will be receiving the dividends and you know, making decisions as to what I'm going to be doing with that. And I am interested and I want to do dividend investing for, you know, for my future and for basically creating a passive income with that. But yeah, this is how my thoughts are going and what I probably want to do. And this is why I started this channel, you know. I wanted to just put everything out there, talk to you guys, see what your opinions are, you take my opinion, and basically we create, we grow, we invest, and we retire together. So, you know, if we can do that in the next 10, 15, 20 years, no more than that. I mean, who wouldn't want to have an early retirement and be able to invest time in the things that you would want to do, and You know, I think the FIRE movement is a great movement for that, and I do believe in a lot of people that have done that and are doing that. The only controversy that we have with FIRE is the very high level of frugality. So being very frugal, it's not a thing that a lot of people can handle. I personally think that it's a great thing, but I also think that you should be able to live and enjoy your life. I mean, what's the purpose of retiring early if you are super frugal and you don't, you can't even enjoy all, your achievements? But that's a topic for a different question. Leave a comment down below if you're interested in that, and if you would like me to do a video on that, talking about it, discussing it, and probably start a discussion with you guys, see what you guys think on that. But okay, we are going really out of topic here. The main point of this video was to compare those two investments, see which one is beating the market and which one is more likely to beat it. And the winner in this one is probably going to be Vanguard, purely based on the numbers. However, again, if you create your own sort of fund on trading and you have your own good portfolio, which is growing, but at the same time is paying dividend, I think you will be winning then. I know very big YouTubers have very nice portfolios that are paying them 7-8 grand a year in dividends. So imagine that on top of the growth that you get another almost 10 grand in dividends, which you can reinvest, and the compound interest is doing its work. So I think that's going to be my goal for the next few years. Let's see how it goes. I really want to Now I really want to make it like my fixed idea to create a portfolio that will probably beat even Vanguard, but that's a bit too out there, so I'm not gonna put myself out there just yet. I mean, I'm just learning myself. But based on the numbers in today's video, the winner is Vanguard. I think that if you are just beginner investor, start with that and open a TRADING212 account. I will leave a link down below. When you open a TRADING212 account with this link, you get a free share to start off your portfolio. Open a little TRADING212 account, start buying and selling, or maybe buying and holding. Do your research, see how it goes. If it's not for you, then just keep investing in index funds and ETFs, because as you can see, the growth is pretty good even in situations like this where we have the illness going on. So I don't think you can go wrong. If you are a lot into investment, you probably already have your own portfolio that you're happy with. If you are not, you maybe want to start trying or building like me, then join me on my journey. This is all from me today, guys. Thank you so much for watching. Really thankful for all the comments that I see down below. It literally makes my day. It literally makes me so motivated to create videos, and this is why I'm creating this one and updating a second time in the same week, which hasn't happened before. But I just felt so excited by seeing all of your comments that I really wanted to give out more. It really just makes me excited, and I really wanted to give out more, so this is why I'm doing this extra video. I will try to be definitely more active and bring out more content for you guys. Let me know what more of you would like to see. Let me know things that you're interested in discussing, even if it's just a chit chat video and we're not talking about numbers or investing. Just please comment down below, subscribe, like this video.